All right, well, we'll do that today. All right, team. Well, there you go. No sound yet. I just discovered that one. Hopefully you can hear me now, folks. Hey, Tim. Morning. Good to see all of you online. All right, good to go. Microphone's not as good, but sometimes I had a few tech issues this morning, but better late than never, they say. Welcome to another Wealth Coffee Chat, folks. Good to see all of you this morning. Big hello to everyone jumping on. Aaron, good to see you. Kevin, Scott, Tim. There you go. Morning, Deb. Morning, Alison. How are we, gang? Good to see that that you're all up and at it first thing on a marvelous Monday. While we get things rolling, do the quick intros. If you didn't already know, most of you know this anyway. Jason Witten's my name. If you're new, say hello. Let us know where you are, what you're up to. Great to have you here. If you are dropping by in one way, shape or form, if you're part of our mentoring and coaching program, you might be finding us somehow through the world of socials. Thank you for joining us. We've been doing this each morning for a little while now. It's called the Wealth Coffee Chat. We get together, you and me, and we talk about the world of property investing and how we as property investors get ourselves up and at it and go the distance when it comes to this thing called property investing. You guys know my couple little sayings around here. This thing's a marathon, not a sprint. It takes time to create and grow and build a property portfolio that's going to work. And we need to understand what it's going to take. Time's the number one. Number two, buy well and do not sell. Buy some good quality properties and leave them alone. Take up some hobbies, for crying out loud. Leave those properties do their thing. They take time. And that time is, for most properties, 15 to 20 years to really do something amazing. Any shorter than that, under 10, you're kidding yourself, unless you are an active development investor. And that's not my cup of tea. I teach people how to buy good properties and keep them for a long time so they can get quietly, simply, pretty easily, to be honest, wealthy, so you can just have a good time. Anyway, thanks for joining. Great to see all of you here this morning. Today, I wanted to talk about something that's going on. There's a lot going on. Actually. There's a lot going on. Underlying, I think we sort of talked about it last week. The headline's all about interest rates and that malarkey, which, to be honest, let's face it, folks, we know where it's going. It is what it is. Nothing you can do about it. The challenge, the opportunity we have as property investors right now is to understand what's going on out there and really make decisions based on the underlying momentum of what's happening in the market, not get distracted by media malarkey. Anyway, there you go. So today I wanted to talk about something like that. And one of the big drivers, many of you know that we talk about sort of drivers in the world of property investing. And just to warm things up, let's have a bit of a chat. Let's talk about this. Let's pop that there. Let's talk about this. What are the big drivers? What are the 6 key drivers? Sam talks about these all the time. What are the 6 key drivers, folks? Tell me in the chat as we warm things up. What are the 6 key drivers when it comes to the world of property and property investing, when it comes to our rents and our values? All right, put them in the chat for me now so we can just kick this this conversation off this morning. What are the 6 key drivers when it comes to our values, capital growth, let's say, and rental growth when it comes to, okay, what will drive things up, what will drive things down when it comes to changes in numbers and things in the world of property investing? Whack those in the chat for me as we roll along. Anyone got any idea? Many of you know this from Sam's stuff, but hey, morning, Julie. Good to see you. You are up in Newcastle, I'm sure, or maybe you're out and about. Anyway, let's have a bit of a look at this. All right, number 1, what are the things that can influence the property market as we go? Yep, lack of supply for sure, Tim. Let's do them in kind of interest rates. All right, the ones that are most flexible, that drive property values or give us or give market momentum issues, positive or negative. Interest rates, okay? That's a really important one. Supply and demand, okay? Supply and demand for sure. Population, okay? Population, or the number of populations. Population, jobs, employment, okay, as we go along. The politics, we talk about this, you know, politicians can influence the marketplace drastically when it comes to our world as investors. Matter of fact, we call them the number 1 menace when it comes to our wealth, folks, okay, as we go along. And where there is infrastructure spending, okay? Now we've seen that these are the big drivers, big massive drivers. Interest rates, when they go up or down, they affect the market. When supply and demand goes up and down, they affect the market. So let's have a look at this. Right now, interest rates are putting downward pressure on values, but what they're doing is they're putting upward pressure on rents. We'll talk about that in a minute. Supply is down, but that is a good thing. Population is booming, jobs are booming, politicians kind of, at the moment, it's kind of neutral, and infrastructure spending is booming. So we've got really some drivers that are really positive right now. The only one that the market or the media is carrying on about is this interest rate malarkey. Hey, listen, that for you and me right now isn't one we need to worry about too much when it comes to the future, because we know where it's going, and you know you've got yourself organized when it comes to this stuff. So let's have a look at what's happening right now in this one. This is the one I wanted to talk about today, folks, is population. Supply and demand. Supply is down drastically, but where is population happening? Put it in the chat for me right now. Which state, this is kind of a leading question anyway, because I already put it in the thing. Which state received the most new population, new people? Anyway, which state got the biggest increase in population over the last 3 years when it came to movements internally in Australia? And it was Queensland. Boom. And it's still going, folks. And this is the thing, right now, everyone goes, oh, maybe California. Well, maybe in the US, California got that thing. Queensland and California probably similar. Beach, sun, surf, fun. as we go along. Queensland has got the number one spot. So let's have a bit of a look at that, folks. What happened? And not only Queensland, got the highest, ladies and gents, boys and girls, kiddies, it got the highest by double. So 100% more. 100% more than 100% more than any of the other states Queensland received when it came to the population. Not there. There. I need to put my glasses on. Anyway, there you go. Put my glasses on now. I can see it. Queensland. WA did all right. 1.3. Queensland by a country mile, by a long, long way. And Western Australia next, and then, Victoria after that. Victoria and South Australia. All right. But Queensland, 2 times, double the population increase, ladies and gents. 100,000 people. 100,000 increase when it came to 100,000 increase when it came to people moving to Queensland. And it's interesting, is that going to slow down? Like the conversation is, is it over? Is it going to slow down? Should we expect more? Well, check this out. This is pretty crazy, and it's only getting started. It's only getting started, folks, when it comes to this stuff. We are now looking at, we're probably going to be 25% higher than the forecasts, okay, in the migration for this year. 300,000 permanent migrants into Australia in one way, shape or form. Where are they going to live? This is the question. Not only on top of that, we'll talk about the students in a minute, but where are they going to live? So what I want to take you through right now is this is the question. Put it in the chat for me, and let's talk about this, like where are they going to live? Tell me, where do the new migrants go? And this is something I want you to think about, and this is where at Positive we talk about different locations and different places for investing. And Tim was talking about that in a bit. So demand, location, desirability. So talk to me. A lot of the students are going to go to Melbourne. Melbourne and Sydney are usually the places where most migrants land. A uni, so they'll go to those medium density places if there's enough apartments there. But what happens when people move interstate or into a new place? Where do they go? What do they seek out? They seek out not because they would prefer to live there, but because usually it's the only place that there is to buy and get into the market or new marketplaces, emerging areas, folks. And I want to talk to you about this idea, this concept, when it comes to emerging areas. Inner city is mostly where the students focus, for sure, Tim. So those vacancy rates that were sort of hanging around that were city-based or city-located, that's going to be gone if it's not already. So the city apartment landscape, that is going to get some real rocket fuel when it comes to rental income under its belt. But let's talk about the suburbs when it comes to this stuff and an effect that happens in the suburbs. So what happens, check this out, what happens when, this is sort of southeast Queensland, and when 25,000 people move into an area, Ormo or Oxenford, 25,000 people move into an area, what happens to the market value and the rents there? Tell me, what do you think, folks? What happens? Now, this area was and still is one of those emerging areas. It's one of those areas where there's been land releases, development and continuous, momentum when it comes to the value of the land and the dirt and whatever, as we go. So what happens when 25,000 new people move into an area? I mean, it's a self-fulfilling question, to be honest, isn't it? But I want you to notice this stuff, because when right now, what's going to happen as the population grows and people move, these areas, these emerging areas are going to get some significant value growth. And Sam talks about this all the time, this ripple effect, okay? 25,000 people moved into Ormo, Oxenford. And let's have a look at what happened in that area as those people did it. Like, let's have a look at this. And I'm going to turn that one off in here. So this was kind of like, if you have a look at, we talked about this the other day, 10 years of low interest rates kept this area on when it comes to houses. Let's just do that because it keeps it clearer. Houses, like the rent didn't go up, the values didn't go up. Check out this. Along comes this process of people moving in. Let's call it down here. Let's call it 400, 430. And now when you look up the top here, 670. 430 to 670. In under 2 years, the rents went up. How much did the rents go up there, team? Tell me right now. In the chat, the rents went up $220, like $100 a year. $100 a year. And that will happen, and that's going to continue to happen pretty significantly. Were the values affected? Let's have a look at that. Let's have a look at what might go on there. Let's go at the asking sales price as we go. Whoa, well, there you go. Look at this. 2020, October 2020, 500, 8. Look, do the math on that one, team. Do the math on that one. Not only was there COVID madness going on, but that area, which wasn't established, it was a new emerging area. Population moved there, and the values went from 500 to 800. Mind blowing, and folks, the rents went from 430 to 680, like that. Crazy big times, all right? Big time crazy. So, for us as investors, what does that mean when it comes to, how we invest in the future as we go along? Because when we see areas and population growth coming into Australia, record population growth, team, record population growth. Now, when what tends to happen in Oz is when people land in the country. Here's my terrible drawing of Australia again, by the way. There's Tassie, and where's Canberra? There somewhere. Okay, what usually happens is they land in two places as the majority, and then what happens is they spread around the country. Okay. Thanks, Alison. I've been practicing over the holidays. All right. So, what's the takeaway today? What's the point of our conversation? What's the point of the conversation? The point is, team, folks, where we are right now, don't get distracted on this rhetoric around the interest rates. There are so many other powers behind the marketplace. And yes, the borrowing power of most people has been affected. So that will cap the capital growth for a while, which is very normal. It's nothing abnormal. It's nothing to be like, oh, the sky's falling, right? But what it's doing is it's pushing our rents up, and also it's making supply harder to deliver, which is a problem. I think that's a problem, but anyway, that's nothing else. And for us as investors, sitting on the fence, waiting is not a good idea. If you are in the market, you should get on with it, because it's only going to get worse. And when then people realize, the world hasn't ended, and that market, that amount of people have built up and sat on the fence for a while, Goes, oh, I'm sick of waiting. I've got to buy my property. I've got to get on with it. You are going to miss out, because not necessarily miss out. You're going to pay more than you should because you sat out with all of the other majority, which you should have been doing the opposite to them. Anyway, that's the point. There's a lot of population coming. It's not going to stop. It's going to affect things now and into the future. And you, as a property investor, need to be ready. Anyway, there you go. I think I'm over time today because I started a bit late. But there you go. Yeah. All right, team. That's it from me today. Wealth Coffee Chat done and dusted. Thank you for joining, as always. If you want to join me tomorrow, please do. Let's have another chat. I had a bunch more organised on this conversation, so I think we'll do part 2. I think I had another part 2 the other day too, didn't I? The servicing part. I think I'll do part 2 of servicing and part 2 of this conversation this week. So join me for part 2, 2 part 2s. Anyway, shut up, Jason. You're just dribbling on now. All right, team. Good to see you. Thanks for hanging out, and you guys have an awesome day. That's it from me. Adios. Bye for now. See ya.